Yo, what's up, guys? We are back with another video. It's been a minute. I know we promised that we're gonna post videos each and every week, but yo, sometimes we get so busy that we don't manage to make a video. But whenever we get time, we're going to continue dropping videos as promised. I just want us to look into, I think, 3 pairs or 4 pairs. AUDJPY, GBPUSD, GBPJPY, EURUSD, and GBPCAD. I think most of my pairs this week is the GBP pairs. So let's jump right into it. We have AUDJPY here. 3 hour time frame. One thing that I can see, let's see. The first thing that I can notice here, it is the equal highs that we have there. We have the equal highs. We know that with the equal highs we need to break them, because with the equal highs they create a liquidity. So there's a liquidity above the equal high. So we need to grab that liquidity before we can continue to do whatever that we want to do. We can see also that there is equal lows here. We have equal lows here, and the liquidity on that, below that, has not been grabbed yet. So we still have liquidity here. Where can I put it? I think I can put it there. We still have liquidity there. We still have liquidity above this equal highs. So in that case, let me see if I have something here. Let me see. Okay. Okay, so okay. Let me go back here. Okay, so I think okay, I think we have a break of structure here. We have a break of structure here. That is a break of structure. So with that break of structure, I'm assuming that there has to be an order block somewhere here that we are going to mitigate before we can continue to drop. So if I can change my candlesticks and then say, okay, fine, I can look for an order block here. I can look for an order block here. That should be my order block. So okay, so I have an order block here. Let me go back to these guys. I have an order block above there, which I believe that we might use to take out the liquidity for this for this equal highs. Take out that liquidity before you can continue to drop, right? So I'm expecting this pair to use that order block to take out the liquidity for this equal highs, and then we can have that pair drop. Let me see if Fibonacci has something on us, something for us. Fibonacci, yes, Fibonacci, it's gonna give us 61.8%. That will be our 61.8%. So yeah, I'm expecting this pair to use the Fibonacci 61.8%. Then we can drop from that price. So yeah, let me just zoom it. So we can see it. Yeah, so this is what I'm expecting in AUDJPY. I'm expecting AUDJPY to use this order block here. That is an IOB. To use this order block here, and then it can drop from there. So if you can just use these guys here, we're going to have something like these. We're gonna have something like this, and then also going down, we still need to take out this liquidity, the liquidity below. After we do that, that's when we can think of going up. But we'll look into that once we manage to drop from that order block. So once we manage to drop from this order block, once we break this equal lows, then that's when we can analyze this pair and anticipate either a bullish movement or a continuation movement. Yeah, so that is AUDJPY. That means we are going to sell AUDJPY around 96. Is it 96? Yes, 96, and then our stop loss will just be above 96.3. that will be 30 pips. Yeah, 30 pips. And then our take profit, we can take profit at 92.2. Yeah, 92.2. That is around 400 pips. So yeah, an entry at 96, and then stop loss just 96.3, and then take profit 92.2. That will be our take profit. AUDJPY. Yeah, I think there is nothing much on AUDJPY. We just need to take out those equal highs, and then we drop. And then GBPAUD. What is happening on GBPAUD? What I can see on GBPAUD, I can see a double top. The first thing that I can see for institutional traders, I can see a double top which is now retesting the neckline. We'll be expecting this guy to continue to go down. So for those who trade patterns, at least that's what you are looking into currently. You are looking to sell this pair and then continue to go down. That is the overall momentum for this pair. It is supposed to continue to go down and complete this double top, which has broke the neckline, right? We broke the neckline, so we now supposed to continue to go down. But we know that is for institutions. Let's see what is happening, exactly where we should get an entry. Let's see if we can get an entry somewhere. Let's go into H2. What is happening on H2? Okay, so on H2, I can see we have a a change of character here. We have a change of character. That's the first thing that I can see. We have a change of character there. And then, okay, I can see, oh yeah, that's nice. This pair went down there because of that QML. That's nice. It showed that QML shows, the QML was a sign that this pair, its momentum, it's a bearish momentum, it's a bearish movement. So that QML, it was a confirmation that indeed this pair, it has to continue going down. So yeah, let's forget about that QML because it has already taken place. So we have a change of character, which we should now look for an order block just above here. Mitigate that order block and then continue to go down. We should mitigate one of the order blocks there, and then we can continue to go down. Which order block is that? So the first thing that we are going to do, we can use a Fibonacci. Fibonacci is going to give us 0.50, 0.61, and then 0.786. So obviously we are looking for what do they call it, the discounted price? I think so. I think they call it the discounted price, which is going to be either 78.6 or 61.8, one of those two. Now, what we are going to do now to determine exactly the one that we are going to use, we are going to apply. This was a drop. From a drop, we have a base. We call this a base. And then from a base, we had a drop. So, a drop base, a drop, and then a base, and then another drop. What should happen when you see a drop and then a base and then a drop? What should happen? Let's stick to theory. Let's stick to theory 2022. Let's see. Theory for that, it should be, yeah, it should be here. So we have a drop, a base, and then a drop. From a drop, we have the pair coming to retest on that base and then continue to drop. So right now, we are waiting for that pair to come and retest the base, look for an order block on that base, then it can continue to drop. So that is our base. We are waiting for this pair to look for an order block within the base before we can continue to drop. We are looking for something like that. Now, that means we should look for an order block within that base. So the order block that I'm interested in right now, I think would be this one. There's the order block that I'm interested in, because I want to sell this pair around 78.6. That is where I want to sell this pair. So I'm expecting this pair to use this order block. But then, because there is a Fibonacci level above, there is a possibility for this order block to be manipulated as well. There's another one here. This one is going to be manipulated because it's within 61.8. So this one as well, I'm expecting it to be manipulated by breaking it through. So we might use this one. There's the one that we might use. That's the one that we might use. This order block here, which is aligned with 78.6. And also that order block, if you look on the left here, you can see that this pair, it gave us that. So it means this is going to be our QML. There's going to be our QML. So we expect this pair to go down, come back to the QML, retest, test that QML, and then continue to go down. So we are going to use 78.6 and the order block on 78.6, which is aligned with the QML. So I expect this pair to go all the way up to 78.6 before it can drop. It is going to do that also to satisfy these. To satisfy this, go all the way deeper and then continue to drop. So let me just clean that. Let me clean that real quick. So yeah, that drop, the QML QML is supposed to be here. That is the QML. So remember, QML is a zone, so it's going to be something like that. And then this is our base. This is our base. So we expect this pair to go all the way up there, and then it can drop. Also, for those who are buying this pair right now, you are buying it because if you look closely, you're going to realize that we had an imbalance here. And then this was our our OB. We had an imbalance there, which I believe we closed up. Now we should continue to go up. So for those who are trading a buy, obviously your take profit, it is going to be this leg, because it's what you call it, it's a B and then a C there. So 0A should be equals to BC, right? It is equals to BC. So if we just copy this guy, if you can just copy what's going on, if you can just copy this guy, and then we just put him there, this is where the C is going to complete. We are expecting the C to complete here, because that is where the leg BC, yes, we close the leg BC here, because the leg BC, it is equals to the leg 0A. That is how it's supposed to be. So we are going to close the leg BC here. So and immediately when we close the leg BC, that is where we expect to have a drop. We expect to have a drop once we complete the leg BC, which should be equals to the leg 0A, right? So we complete it here, and then we drop. And where we complete it, that is our Fibonacci level 78.6. That is 78.6, and also that is our QML, and also that is our base. So we are just testing the base, and then we can continue to drop. And remember, we are saying the momentum for this pair, it is very bearish, because this is a double top. We are just retesting the neckline. This is what you call the manipulative retest. For my students, they know what a manipulative retest is. We are just doing the manipulative retest, and then we can continue to drop like that. So our entry, let's get to the entry side of things. Our entry is going to be, we are going to have an entry around, we can do 1.799, and then our stop loss, let me see if there's an order block above. Okay, our stop loss can just be, I think, above here, just above there. So I was saying an entry with 1.799. I think that's what I said, 1.799. Let me see, 1.79, 1.80. 1.80, we might miss it. So let's go for 1.799, and then stop loss just 1.803, around 1.083, just above the QML. So your stop loss will be just above the QML, and then your take profit, you'll see if your stomach is full, you can close your order, but you're gonna go down for a long time. Yeah, so that is GBPAUD entry here, and then we continue to go down. That is a double top for those who trade. For those who trade patterns, that is a double top. But you know, for you guys who are trading patterns, you know that the market will always manipulate your patterns before they can continue to go. So this is how they're going to manipulate your double top. They know you are currently waiting to retest the neckline and then continue to go down, but they are going to stretch you a little bit, then they can continue to go down. That's how they're going to play with your pattern there. But at the end of the day, that is a double top. They're just going to stretch you, make you believe that your double top has failed, and then from there they can continue to go the way that you anticipated. You are going to wake up, you're going to look at this pair after a week and then you realize that, I was right, even though you didn't make any cent from it. So yeah. So right now, for those who want to buy this pair, they can buy it. The trade has high risk, but you can still take that risk. You can buy it up to this point. I think there's around 250 pips. That's a lot. So you can just buy it from here and then continue to go up there. As for me, I am going to wait for the sell opportunity up there. So yeah, GBPAUD, and then GBPJPY. What is happening on GBPJPY? Okay, I can see for those who are trading patterns, I can see this is your first rejection, second rejection, that is your neckline, and then that is your head, the neckline retest, and then we are now hoping to create another shoulder retest neckline and then continue to go down. That is a head and shoulders. That is for people who are trading patterns, right? You guys are anticipating a head and shoulders, and indeed it is going to give us a head and shoulders, but you should know that the market makers, they're not going to give it easy to you. It's not gonna be easy as you think. But yeah, so what do we do? Let's first mark that to be our neckline, or to be first support, second support, and then that means if we have triple support below here, that will be our fake out zone, but we are not going to use it as fake out zone for now. Let's not do that. So we have that, and then we have this, and then we have that. So I can see an internal change of character here. I can see an internal change of character there. That is a change of character. So change of character, I can see we were supposed to create a head and shoulders here. Remember, a head and shoulders that fails, then the next thing that we should expect is what? A QML or a QM, a Quasimodo. We should expect price to come back to these and then continue to go down. So now we have a QML there. We have an internal change of character here. Once we do an internal change of character, we expect a pair to look for an order block just above that internal change of character, or above that change of character. Look for that order block, mitigate the order block, and then continue to go down. So we are going to hunt that order block, and then we can use it to as our entry to go down. So how do we do that? Let's start by using a Fibonacci retracement tool. So we are more interested on order blocks that are above 0.50. We are interested on an order block which is around this area. We are interested in an order block which is around this area. This is the order block. These are the order blocks that we are interested on. So obviously the order block that is on 61.8, it means it is not, we are not going to use it because we have a QML above that we are supposed to satisfy before we can drop. So we are going to take out the 0.618 order block and use the 78.6 order block. So let's see where that order block stands. So the 78.6 order block, this is where we get it. This is where we get the 78.6 order block. And then there's our QML. There's the order block. And then let's go back to these guys. So this is how it's supposed to be. We are going to mitigate this order block at 78.6. So we expect this pair to go up to 78.6, which is the QML, and then that's when it can drop. That's when it can drop. So we have a QML. We have a QML here, and then we have, this is what? This is an order block. Is it an IOB or an OOB? This is an IOB, and then yeah, something like that. Something like that. 78.6, right? Yes, 78.6. So we expect this pair. Let me put some. Let me put some nice move here. So we expect it to mitigate that before we can have a drop. Yeah, where are you going? Before we can have a drop. So we'll be expecting to drop here. Now remember I said there is an FOZ there, so we might use this as our fake out zone retracement, and then we are going to retrace the neckline, retest the neckline, and then continue to go down like that. So now our entry is going to be around 170-500. Let me see. Yeah, 170-500. That would be our entry, 170-500, and then just above here, just above the QML, I think 170-900. Yeah, 170-900, somewhere there. That would be our stop loss, and then take profit. We're going to exit when it gets to 162.4. 162.4. Yeah, we are going to. We're just going to take it. We're just going to go 800 pips. Yes, we're going to go 800 pips on that. So what I do, because that will be my final destination for this entry, we are going to get opportunities as we go down. So if I get an entry here, what I'm gonna do, I'm gonna look for retest here. I'm gonna look for retests here. For retracements here. Enter on the retracements until I get to my take profit. So that will be my shoulder, my head, my shoulder, the neckline, breakout retest, and then we continue to go down. That is GBPJPY. EURUSD, what is happening? EURUSD, what is happening on EURUSD? EURUSD, I did analyze EURUSD last week when it was still here, and I said EURUSD, it is going to use this QML and then continue to go up. That's what I said. If I play these, you can see that indeed EURUSD used that QML and then continued to go up. This is where we are currently. This is where price is right now. I think I still have that. That was week 41. Week 41 EURUSD. Where was it? Yeah, this is where I had an entry, and then went up. So I was trading this with just basic trend rules. So I have a trend there. I have another trend line there. That is another trend line. So if I do this, if I do that, okay, so that is for people who are trading trend lines. You guys should be expecting this guy to test on that trend line and then continue to drop. That's correct. You guys, you don't have any problem doing that. There's no problem doing that. Okay, so for people who are doing market structure, this was a break of structure, right? This was a BOS. This was a BOS. So you guys were looking at using an order block there and then continue to go up. So now we are looking forward to breaking this to create another break of structure. We are looking to break that high, that last high. We are waiting to, we are looking forward to break that last high, and then yeah, so I was still saying we are waiting for this pair to give us a break on the previous high. So we are expecting that guy to break the previous high before it can continue to go down. So if it's going to break the previous high, that is gonna give us a BOS, or a break of structure, and if it does that, then we are going to be looking forward to use an order block below here before you can continue to go up. So there is still a possibility for EURUSD to continue trading between these two trend lines, or trading in this channel. There is a possibility for EURUSD to continue trading in this channel, because if it's going to break a structure here, then we are going to use an order block here before you can continue to go up. And also you can see that there is an imbalance here that we are going to balance and then use an order block before you can continue to go up. So now if you look on your far left, you can see that there was an imbalance here. There was an imbalance here, which I believe we still haven't closed it yet. We are going to close it if we get to that candle. If we get to that candle, that is when we are going to close or balance this candle here. So we are expecting this pair, this price to continue to go up, close up the imbalance before we can continue to drop. So the same entry that we have here, it is the same entry that people who are trading trends, they are going to have that entry where immediately when price hit their trend line, they're going to have an entry there. That is for people who are trading trends. The trading trends, it's more institutional, I guess. So for institutions, when they get to this point, they're going to have an entry here. And also that will be after we close. That will be after we close that imbalanced candle, right? If we do candles, I think we have a point of interest, supply zone. We have a supply zone here. So this is where we expect this pair to mitigate this and then continue to drop. So we are going to sell EURUSD around 1.015. 1.015. This is where we are going to sell EURUSD, and then our stop loss will just be above. I think for us to be safe, let me see how many pips is that. I don't want us to stretch our accounts. I don't want us to stretch our accounts. So I think just above here, around 40 pips. Yeah, 40 pips is okay. I think 40 pips, or we can just go 45 pips, because we are going to go, our take profit will be around 300 pips, 360 pips. So if we go 45 pips, that would be 1:7, almost 1:8 risk ratio, 1:8 risk ratio. So that even if we go 45 pips, that's reasonable. That's reasonable. The reason why I want us to go 45 pips is because we might utilize this whole space here before we continue to go down. So if we enter at the beginning of the candle, there is a possibility for price to utilize this whole space before it drops. So for us to be on a safe side, we can just put our stop loss just above this highs here. So yeah, our entry will be there, stop loss, take profit there, and then we are going to buy it when it gets to this point. But that will be, we are going to cross that bridge when we get there. We are going to reanalyze it. If it gets to this point, we are going to reanalyze it. So for now, let's focus on selling EURUSD. We are going to sell EURUSD. Let me see if I can get PAUD. Yes, I can use these guys here. So we are going to have something like this. This is what you're gonna have. Break of structure, mitigate the POI there, or the supply zone, and then we drop. EURUSD, and then GBPCAD. I think GBPCAD it is similar to other GBP pairs. The first thing that I can see here, we have a change of character. We have a change of character here. So with a change of character, what should we do? We should look for an order block above, then we can continue to drop. So the first thing that I can see, the other thing that I can see here, there is an imbalance here. FVG, fair value gap here. We tapped on that fair value gap, so there is a possibility for price to think that it's done with going up and then continue to go down immediately. But I'm not going to, if it does that, then I'm not going to trade it. What I'm looking for, it's for these drop, base, drop, and then entry within the base. That is what I'm looking for. So if it's going to use the FVG and then continue to drop, then I'm not going to trade it. I'm gonna miss this one, because what I'm looking for, it is to sell this pair when it gets to the base. When it gets to the base, that is when I'm going to be selling it. So the base is there, the base, and also we can see, I can see there is a QML there, okay, nice. So base, drop, base, and then drop, and then remember, I think it's here, yes, drop, base, drop, we come back, we retest, and then we continue to go down. So drop, base, drop, and then we retest the base, then we can continue to go down. So I'll be looking forward to use the base. So normally what I do within the base, I'll look for an indecisive candlestick. I think you can use this one. Yes, I can use an indecisive candlestick there as my order block. There, that will be my entry. That will be my entry there. And let me do that. Okay, so my entry will be on that candle there. I'm expecting this pair to tap on that zone and then continue to go down. But because there is a QML above, this can be manipulated by taking out that, testing on the QML before we drop. So if I'm going to enter using the indecisive candlestick, my stop loss has to be above the QML. That is to cater for price if it decides to stretch even more, then I should still be within the trade. So if I enter here on the indecisive candlestick, my stop loss will be just above the QML. So it is going to be something like this. It is going to be something like this, just above. And then my first take profit will be this zone, and then my last take profit will be after we close this imbalance. After we close, because there is an imbalance here, so immediately when we close that imbalance, that will be my take profit. That is around 733 pips. Yeah, that's a lot. So 1:11, that's a lot. So yeah, there's how I'm gonna trade GBPCAD. I'm going to trade GBPCAD. My entry will be around 1565, and then my stop loss will be just around 1572. 1572. So a take profit, that will be up to you. If your stomach is full, you get out. And then what's happening here? So here I was trying to just the bonus analysis. Here I was trying to analyze V51S. So with V51S, normally what we do when a pair is like this, we normally expect a pair to use this zone and then continue to go up. But in most cases, we are going to see a pair break in the zone that we were expecting our pair to use as a rejection zone. So when we break this zone, that is when we go into our notes. We call in, where is that guy? Where are you? You're supposed to be here. Yes, we are going to call this guy here. We break the zone. We do whatever we do here. Once we break inside, we are going to wait for a retest, and then we can continue to go up. So for those who are trading volatilities, I am waiting for this guy to break inside, retest, and then continue to go up. Also, you can see that he is creating a double bottom here, and then that means this guy is going to serve as a neckline. So if we break that, we are going to retest the neckline and then continue to go up. So we are going to apply this setup here. This is what we are going to apply. So we break, we retest, and then we continue to go up. That is for That is for people who are trading volatilities. And then VIX 50, VIX 50, VIX 50. I shared an analysis on VIX 50. VIX 50, VIX 50, where are you? VIX 50, VIX 50, where are you? Which week is this? Week 42. Week 42, I'm supposed to have... What's going on? So I don't have my VIX 50. Yo. Something happened. Or maybe it came here. I don't know. I did analyze VIX 50. I don't know where it is. VIX 50. But if you go into Facebook, I think I did share my VIX 50. Wait, was I dreaming? No, I wasn't. I was not dreaming. Yes, this is my VIX 50. So I analyzed VIX 50. I had a change of character here, so I expected this pair to close up the imbalances here and then use the order block above here, and then it can drop. As you can see, this is exactly what happened. Change of character, order block, and then we drop. Then here, as you can see, I have a support here, which I believe we are just going to break it, and then we can continue to go up. So we're going to use this POI here, then we can continue to grow up. That is for people who are trading volatilities. These two, they're just bonus analysis. They're just bonus analysis. So this one, I'm expecting it to go up. GBPCAD, drop. EURUSD, drop. GBPJPY, drop. GBPAUD, rally, drop. AUDJPY, drop. Yeah, that should be it from my side. We should meet again on the next video. Bye bye.